National Bank of Kenya reporting its results yesterday. Pre-tax profit down 4%, hit by declining demand in government securities with interest rates and inflation rising. But if you look into those numbers, customer deposits actually grew 17% to 52.8 billion shillings. Net loans and advances growing considerably, up by 61% to 23.5 billion shillings. Overall, though, earnings per share shrunk 30%. What did you take out of these numbers?
Well, I think National Bank for last year had a very outsized Government of Kenya bond portfolio. They were really a play on the bond market. They're now trying to evolve out of that and grow the loan book, the customer loan book. So we're in this transition phase as they expand the loan book, as you so correctly noted. But I think, first quarter, it's been a pretty torrid time in the Kenyan bond market. You've had a big move out of the long end into the short end, and I think they've been caught a little offside on that basis. The long-term story about National Bank is the government's looking to exit and sell a strategic stake, and I think, that's what investors are really looking for.
Now, looking at their plans for the rest of the year, they are intending to expand their branches into the rest of the country. They're also looking at new products on the mobile telephone banking side of things and introducing a new core banking system. So there are some positive developments there that could see profits rise further.
Yes, absolutely. I think they're moving forward. They're trying to extend the credit portfolio. For a long time, they had to work off some accumulated losses. They played it very cautious on the balance sheet. Now we're seeing a much more expansive phase and a bit more offense.
Looking at CMC Holdings, also reporting pre-tax profits up 2%, sales falling though 9.6% to 6.19 billion shillings. Now, if you look at the number of cars sold for the first 6 months, 1,200 vehicles. Now, that was 270 less than the previous period. Looking at the overall Kenya market, though, for the first 4 months of the year, vehicle sales actually climbing 11% to almost 4,000 vehicles. So it's not exactly the same period. Why would you think that CMC Holdings actually underperforming the rest of the market?
It's quite an interesting share. You've got a new shareholder who's muscled in onto the share register. We had the first sort of deposing of an underperforming CEO at CMC. There was 3 years of declining losses, a sequence of 3 years, and they're looking to arrest that. I think essentially what's happened here, as far as I can see, is they've cut off credit. There were a lot of credit sales of vehicles previously, and I think they've completely choked that off, and that's why you've had the lower number of car sales this time round, but probably the nature of the profits will be more robust than previously.
At 1060 shillings, the company does expect to increase sales in the second half of the year. So at 1060 shillings, would you be looking to buy into the stock?
I would, because what's happening on this share is the principal and new shareholder is continuing to mop up shares at 1060 and below. So I think you've got very limited downside risk. They continue to look to increase their shareholding. So you can lean against that. The PE is about 15 and a half. I think we've seen the nadir in the earnings cycle, and I think we're going to have quite a nice rebound going. It's not a cheap, outstandingly cheap share, but I think on a trading basis, you can lean against the main shareholder continuing to expand their position.
Let's just take a look at the tea sector now. Kenya tea production expected to fall by up to 10% for the year of 2011. Adverse weather is to blame. Now, if you just look for the first quarter, tea production, cumulative tea production dropping almost 21% year on year. How do you expect this to affect tea stocks? Could this actually play into higher prices?
The first thing to remember is this comparison with last year. Last year we had optimal rains, we had an incredible production cycle, which allowed these tea companies to sell a great deal more tea than they had done historically. So that's the first thing. The comparison's a little bit tricky. I think we're going to see sharply higher prices in the tea markets, as I'm very bullish about the breakfast commodities. I know we've had a little pullback, but overall I think they're in a very neat and absolute return trend, which is attractive. And I think tea prices have underperformed what you lose in production, you tend to more than gain in the price increase. So for myself, I'm not worried about that trade-off between production and prices. Tea companies at the Nairobi Stock Exchange trade at simply egregious levels. For example, yesterday, Sasini Tea and Coffee reported results. They trade on a trailing PE of 2.5. As an investor, I think, there is hardly any downside risk. There's tremendous breakup value if management in some of these tea companies gets aggressive about shareholder value extraction, something they haven't done for years. But we've got a very low PE to lean against, and we've got very high breakup values in the order of 8 to 10 times the current share prices.
Just looking at the overall market, some traders say they expect the bourse to hold flat in the next few sessions. Fund managers sitting out of the market with most counters fairly valued at this stage. What are your thoughts on trade today and for the rest of the week?
Well, firstly, the market has been very dominated by foreign investors. They're the dominant counterparty at the Nairobi Stock Exchange all year. They've continued, I think, to upsize exposure to sub-Saharan African equities, and we're one of those destinations. Local retail investors remain on the back foot, and local institutional investors are facing a much trickier time in the bond market, and I think are going to have to look at the equity market more closely. The stock market for now, I think, is flatlining. I don't see a big catalyst to move it up or down dramatically. It's probably biased a little to the downside given the uncertainty around the world, and some uncertainty here as well regarding inflation, cost of living, and continued high food prices, which are crimping spending power at the bottom of the pyramid.